How do political policies such as taxes and social programs affect the stock market? In this short video, we're going to discuss what history can tell us about these policies. Before we begin, I want to remind everybody, please subscribe to our YouTube channel. Hit that subscribe button down in the corner of your screen, and if you find our insights valuable, you can sign up for our free newsletter at www.forterraswealth.com. So what can history tell us about tax policies and social programs and their effect on the stock market? Well, the answer is actually pretty interesting. So two of the more notorious presidents in our recent past for tax cuts have been President Reagan and President Bush. The Reagan administration cut the highest tax rate from 70% all the way down to 28% by his second term, and the lowest tax bracket went from 14% all the way down to 11%. During his tenure, his administration also cut capital gains taxes from 28% all the way down to 20%. So how did the stock market do during his tenure? Actually quite well. On average, it was up 15.8%. Before you start thinking that tax cuts are the end-all be-all for the stock market, let's look at the Bush presidency. In 2001 and in 2003, Congress passed tax cuts which reduced the income, capital gains, and dividends tax rates. The market must have gone up, right? Well, on average, the market was actually down during his presidency, 4.4% per year. But what did happen during his presidency? Well, the stock market crash of 2000, 9/11, and the onset of the financial crisis in 2008. All huge market events that had little or nothing to do with who controlled Congress and the White House. Many argue that higher taxes and social policies are bad for the stock market. One president that was notorious for this was President Obama. During his tenure, Congress passed the Affordable Care Act, as well as raised the top marginal tax rate to 39.6%. During his presidency, the market averaged 16% on an annual basis. So while who is in charge is a variable in what happens in our market and the economy, it's not the sole variable that determines the stock market's success. There are several other factors such as consumer spending and behavior, inflation, GDP growth, commodity prices, that are all baked into stock market prices and that all ultimately determine the stock market's success. We can't stress enough the importance of having the proper investment strategy, no matter who controls the White House or Congress. This election season, be sure to vote with your ballot and not your bank account, and remember that you're investing in companies and not political parties or their policies. If you need help devising an investment strategy to help meet your needs, please contact us directly, and don't forget, please subscribe to our YouTube channel.